Hi students, O-Levels Online presents the video lecture series for other adjustments of financial statements. In this video, we will discuss the bank reconciliation statement, definition and related explanation. This video series is helpful for those students who are appearing in Cambridge O-Level upcoming exams, either in June or November, through CAIE or IGCSE or IGCSE, 9-1, for accounting 7707, or 0452 or 0985. Let's begin with the lesson material. What is a bank reconciliation statement? A bank reconciliation statement is a document that compares the bank balance as per the company's records or cash book with the balance shown in the bank's statement. The purpose of preparing a BRS is to identify and explain the differences between the two balances, ensuring the accuracy of both records. Let's check its importance. In this slide, we will check the importance of the bank reconciliation statement. The first point is error detection. It helps in identifying errors made either by the bank or the business in recording transactions. Second point is fraud prevention. Regular reconciliation can help in detecting unauthorized or fraudulent transactions. The third one importance is accurate financial statements. By reconciling the bank statement with the cash book, the business ensures that the financial statements reflect true and accurate information. And the final point is cash management. BRS provides a clear picture of available cash, which aids in better cash flow management. Let's check some key terminologies regarding the BRS. During BRS explanation, we will use different terminologies. It should be understood by you. The first is cash book. It is a record maintained by the business that shows all cash and bank transactions. The next terminology is bank statement, a document issued by the bank that lists all transactions in the business's bank account over a certain period. The next terminology is debit side of cash book. It records all deposits or inflows into the bank account of the company. The next terminology is credit side of cash book. It records all payments or outflows made from the company's bank account. The next terminology is check. It is the financial instrument. Through this we can make payments via a bank account. The next terminology is checkbook. It is the book issued by the bank to their customers for making payments. The next terminology is bank overdraft. A bank overdraft is a facility provided by a bank that allows a business or individual to withdraw more money from their bank account than what is currently available in the account. In other words, it permits the account holder to have a negative balance up to an agreed limit. The next terminology is bank reconciliation statement. It does not form part of the double entry records of the business. It is a statement which shows that, on a certain date, the bank account and the bank statement balances were reconciled. The last but not least point is updated bank balance. The updated bank balance in the cash book appears in the statement of financial position or the balance sheet. Let's check reasons for the difference between cash book and bank statement. In this slide, we will discuss the reasons for the difference between cash book and bank statement, in the context of the bank reconciliation statement. The first point is the time difference. In this point we have 5 sub-point, need to discuss one by one. The first sub-point is unpresented checks or outstanding checks. These checks have been issued by the business and recorded in the cash book but have not yet been cleared by the bank. That's why it is created the difference between a cash book and the bank statement. The second sub-point is uncredited deposits or direct deposits or bank lodgements. These are amounts deposited by the business into the bank, recorded in the cash book, but not yet processed by the bank. It is the reason to create the difference between a cash book and the bank statement. The third sub-point is credit transfer or bank giro or direct transfer. These are the amounts directly collected by the bank from the customers, which has been recorded in the bank statement but not yet recorded by the company in the cash book. It will create the difference between a cash book and bank statements. The fourth sub-point is divided received. These are the income against the investment received by the company. Normally, It is directly reflected in the company's bank account but not yet recorded by the company in the cash book. It will create the difference between a cash book and bank statements. The fifth sub-point is standing orders or direct debits. These are the written instructions for the payment to a specific client or firm by the company to the bank at any specified time. This payment reflects in the cash book but not reflected in the bank statement. It will also create the difference between a cash book and the bank statement. Let's check other differences too. The second reason is the errors. It has two sub-points. The first sub-point is errors in cash book. The business may have recorded a transaction incorrectly, such as a wrong amount or omitted entry. It will create a difference between a cash book and the bank statement. The second sub-point is errors in bank statement. The bank might have made an error in recording transactions, such as entering a wrong amount. It will also create a difference between a cash book and the bank statement. The third reason is bank charges and interest. It has two sub-points to discuss. The first sub-point is bank charges, fees such as service charges, overdraft charges, or checkbook charges that the bank deducts without the immediate knowledge of the business. This action of the bank will create a difference between a cash book and the bank statement. The second sub-point is interest credited or debited. Interest credited or debited by the bank which may not have been recorded by the business. It will also create a difference between a cash book and the bank statement. The final reason is dishonored checks or unpaid checks or uncleared checks. Checks deposited by the business but returned unpaid by the bank are recorded by the bank but may not yet be reflected in the cash book. It will create a difference between a cash book and the bank statement. Let's check the steps involved to prepare the bank reconciliation statement. In this slide, we will discuss the steps involved to prepare the bank reconciliation statement one by one. The first step is, start with the balance. Begin with the balance as per the cash book or the bank statement. Normally, we will start with the balance as per the cash book for the reconciliation. The second step is, add or subtract timing differences. Add uncredited deposits. These are deposits recorded in the cash book but not yet credited by the bank. Subtract unpresented checks. These are checks issued by the business but not yet presented for payment. These actions required clearing the difference between a cash book and the bank statement. The third step is, adjust for errors. Correct any errors identified in either the cash book or bank statement to clarify the difference between them. The fourth step is, adjust for bank charges and interest. Deduct any bank charges or add any interest credited by the bank that has not been recorded in the cash book. The fifth step is, consider dishonored checks. Deduct the amount of any checks that were dishonored. The final step is, final balance. The adjusted balance should match the balance shown in the bank statement or the cash book, depending on which you started with. These are the above steps need to follow during the bank reconciliation process. Let's check its advantages. In this slide, we will discuss the advantages associated with the preparation of the bank reconciliation statement. The first advantage states that accurate bank balance. After updating the bank account reconciliation, an accurate bank balance is available for the business as on the specific date. The second advantage of the BRS, errors can be identified. Errors in the bank account or on the bank statement can be identified during the reconciliation process. And it will correct in the cash book accordingly by the business. The third advantage of the BRS regarding discovering fraud, it assists in discovering fraud and embezzlement for the business and it will take the appropriate measures against them. The fourth advantage of the BRS states that identification of the uncredited amounts not credited by the bank, can be identified. And it will correct in the cash book accordingly by the business. The fifth advantage belongs to unpresented checks. Checks not yet presented can be identified. And it will correct in the cash book accordingly by the business. The last but not least advantage refers to the stale checks identification. Any stale checks, these are usually those which are over 6 months old, which will not be met by the bank, can be identified and written back into the bank account. And it will correct in the cash book accordingly by the business. Let's check the format, how we will amend the cash book after incorporating the information, which was given in the bank statement. The given format regarding the amended cash book, which is prepared after incorporation of the information given in the bank statement. In this format, you will identify the balance brought down on the debit side. This is the normal cash book, bank, column balance. And the all items which are available on the credit side of the bank statement, which are not recorded by the cash book bank column. On the other hand, the credit side shows the balance brought down too. This is the overdraft or credit balance in the cash book, bank, column. Further, recorded all items, which are appearing on the debit side of the bank statement. Finally, we will balance the account accordingly, and get the final balances with the carried down balances as per T accounts rule of recording transactions. Let's check its vertical style of the format. This is the vertical style format for the amended cash book. Sometime examiner asked to attempt the question with this style. We can see that all debit side items are added in the opening balance of the cash book, bank, column and deducting all credit side items from it. Finally, got the closing balance too as per the T account format in the previous slide. Let's check the bank reconciliation format. In this format, we will start with the adjusted balance of the cash book, bank, column, which was determined by the previous format. Then add unpresented checks, or bank giro or bank lodgement, which is not reflected in the bank statement. And deduct the uncleared or uncredited checks to get the balance as per the bank statement. Let's check other format of the BRS with the overdraft balance. In this format, we will start with the adjusted balance of the cash book, bank, column overdraft balance, which was determined by the previous format. Then do the same procedure as per the previous slide and get the balance as per the bank statement. Let's check some past paper question for the BRS. This past paper question belongs to Accounting 7707, November attempt, Variant 2-1, Question 1, Part C and D. On the 30th of September 2016 the balance on the bank account in the books of Gabby was $450 debit. Gabby received a bank statement for September 2016. The differences between the bank account and the bank statement were as follows. 1. A check for $50 paid to J. Simpson had not been presented for payment. 2. Bank charges, $230, had been charged to Gabby's account but were not recorded in Gabby's books. 3. The bank had received a dividend payment, $120, which was not recorded in Gabby's books. 4. The check received from Kaesler, $860, was not recorded on the bank statement. Requirement is, C. Update the bank account of Gabby. Balance the account and bring down the updated balance on the 1st of October. D. Prepare the bank reconciliation statement on the 1st of October 2016. Start with the updated bank account balance. Let's check the solution. The opening balance of $450 placed on the debit side, this is the debit balance. $120 dividend record on the debit side, which is not recorded by the cash book, bank, column. Bank charges $230 should place on the credit side, which was also missing in the cash book, bank, column. Then get the balance carried down as $340. Let's check the BRS solution. $340, balance as per the cash book, this is the debit balance. Add an unpresented check, $50, get the total of $390. Then deduct $860 for uncredited checks. The balance is $470, a negative figure, shows that the bank statement has overdraft balance. Let's move to other slide. Positively, you got the clear understanding of the bank reconciliation statement and related definition and explanation, as per your syllabus and examination point of view. If you have any query regarding the lesson, kindly ask in the comment section of this video. We will discuss the control account, definition and explanation in the upcoming video. You can download the related formats and lesson material through the link provided below. Thank you for watching. I hope you learned something new today. If you did, like and share video with other people to learn from it. And please subscribe my channel if you want to see more videos like this. Take care of yourselves. I'll see you in the next lesson. Goodbye.